Everything you need to know about renewable energy credits, everything about 6418 tax credits. These are, so let me just kind of hit the disclaimers really quick. We're a technology platform. We're not a CPA or a law firm, so we're not presenting this as tax or legal advice. We don't prepare or file tax returns. That's CPA's job and tax preparer's job. So we just do the technology piece. We're mostly focused on understanding the compliance that's involved in the 6418 tax credits and what's involved in making the renewable energy credits viable and valid, as well as placing all of the pieces, insurance and all that. And then consult your own tax professionals, obviously, for specific situations, hopefully a CPA who's been caught up on 6418 and uses our platform. And then, of course, all examples are just illustrative only. So this isn't anyone's actual information. So it's that time of year. We're going into kind of the fourth quarter here. And so really want to thank you for taking the time with us today. So your CPA just told you how much your taxes are going to be. So a little bit of crying in the house. I guess there's no crying during tax season. Maybe they're crying with joy because they have to pay taxes. Who are we? Who is DealStar? Well, I'm Andrew Dubinsky. This is my third company. My first company a long time ago, sold in 2013, was involved in the mortgage space. We did mortgage compliance and a lot of document settlement and closing, which is a very complicated process and involves a very large asset, the mortgage, which becomes part of a mortgage-backed security. And so we were involved in helping mortgage companies deliver good, clean closing packages and saleable mortgages to large lenders like Chase and Wachovia, Wells Fargo. Those were our clients. So I know a little bit about financial assets and transferring financial assets and settling financial assets. And then so the 6418 tax credit seemed like a perfect entree, as it's a transferable asset. And so I built a platform over the last 2 years to handle these tax credits. We work with brokers. We're a platform that works with CPAs and law firms. We're not trying to replace anybody. We're not trying to do a fully electronic thing. We like the broker capability. We think that's an important relationship, as well as CPAs to take it to their client. Our piece is compliance, IRS registration, tracking, documentation, insurance coordination. We make sure all the documents are there and all the different types of credits meet all the different requirements that you have from the EPA as well as the IRS side. And this isn't a sales deal. We'll talk all about the credits. And so today we're going to be talking about the basics. What is 6418? How does it work? Who can use the credits? Bonus credits, risk protection, what people are paying for these credits and kind of how that part works. And then, some Q&A. So long story short, a lot of tax mitigation to me kind of feels a little thin. And so these credits are really reliable and durable. They're built around, a legislative base. The IRS has opined on these very extensively. And the IRS has really clear rules on the 6418 tax credits and 6417 tax credits as well. And so they are, very durable. Only about 0.5% have ever been clawed back. And even those, it's not even a full clawback. So we'll talk about that. But basically, you get dollar for dollar tax savings on the amount due at somewhere between 10 and 15%. Sometimes it's a little less on gigantic credits, and sometimes it's a little bit more on smaller credits. Unlike R&D credits, you don't require any study. There's no real challenge on methodology. Or if you're familiar with tax products like NOLs or depreciation, there's ownership requirements and they're complex, and there's a lot of tax mitigation strategies. This is the way we always kind of describe it is 6418 is kind of the last thing that you do. So if you're doing tax mitigation and you're reducing and you're taking deductions, et cetera, and you've got everything set up, great. As soon as you get down to the final amount due, if there's an amount due, let's put a credit on top of that and get that down even more. And so We feel like it's a great situation, a great credit to apply in a bunch of different situations. Again, there's kind of no AGI limits and no valuation. And all of the big accounting firms are doing this. They all have teams that do this. We work with a number of them, but, Deloitte and KPMG and, Baker Tilly and Grant Thornton all have teams that do 6418 tax credits. And their clients typically are very large corporations. And so, we feel like there's an opening with mid-market CPAs and mid-market firms to do this and to have this opportunity available. So we think it's a great way to enhance your practice. I think it's a great strategy, a mitigation strategy that's really clean and, very, very unlikely to get challenged. So what are they? Well, the Inflation Reduction Act, as well as the One Big Beautiful Bill, provisioned clean energy tax credits to be sold for cash. And prior to this, there have always been there have been clean energy tax credits since the 70s and the 80s. They've been through, 4 or 5 presidential and congressional, regimes. And so there's a lot of support for them. Typically, they, up until 2022, the Inflation Reduction Act, they were not transferable, meaning you had to be a partner and own it in order to get the credit and to use it. And that makes it a partnership very complex for corporations to buy it. And there's a lot of rules and requirements. And again, it was just not a great scenario. Well, the Inflation Reduction Act made them transferable. And so the buyer buys them for some discount from face value. So it's worth 100 cents to the IRS. We always tell people it's just like an iTunes gift card for the IRS. So you're buying it just like if you bought one at Costco, you buy it for $75. You're basically buying it 75 cents or 80 cents on the dollar. And then you get a dollar for dollar reduction in the discount. Kind of the rule is really simple. There's one buyer, one seller. There's no intermediaries. Nobody's flipping it or marking it up. And all the numbers are pretty transparent. You kind of have to see everything. And it's cash only. And the cash must be delivered to the seller prior to claiming the credit. And so there's no pay over time or property or service exchanges. You can't take intellectual property for a tax credit, et cetera. So it's just cash for credit. Talked a little bit about how the credits used to work. They were difficult to monetize. Partnership flip structures were very expensive and took a lot of time. There was all sorts of governance rules. Really, this was a very niche product in the financial services world. Today, again, any eligible taxpayer can buy credits from any eligible seller. And so they can be used for almost any type of tax. And it opens the market to pretty much every C Corp with a tax bill. There are rules around individuals using them, but for corporations, there's virtually no rules. And this is a $50 billion to $100 billion annual market. It's probably going up significantly because of things like advanced manufacturing and other credits. So they come in 2 basic families. You have the investment tax credit, which is sort of I describe as a factory. So you have this like factory concept. That's the ITC credit, which is infrastructure tax credit. So this is the factory you build the solar farm, you build a wind farm, you put solar on a rooftop. This is a percentage of the eligible project cost. What that allows you to do is to get 30 to 60%, typically 30 to 50% of the project back in the form of a tax credit. It is claimed only one time, and it is subject to a 5-year recapture rule. Typically, this is wind and solar, but more than likely, this is battery and solar are kind of the 2 main ones from that. BESS is what that's called. That's basically a backup battery system for arbitraging the energy system. So the PTC credit is production credit. We sort of looked at it like if you have a factory making sneakers, this is the sneakers. You get a get an annual amount. It can be anything up to about 10 years. It depends on the type of credit. Sometimes some are 7, some are 10. And you get a base rate. This is in kilowatt hours, but this could very easily be in terms of per gallon of fuel for something like, you might have sustainable aviation fuel, or you might have biogas or ethanol. There's no recapture risk from these. The IRS cannot take them back. They can't be taken away. And typically this is wind or biomass, geothermal, et cetera. This is like nuclear as well. Both types of credits can be transferred.